Today you will learn the most accurate 1-minute scalping strategy ever tested on this channel. This strategy is very simple, it does not require a lot of experience, and most importantly, it makes huge and consistent profits. It works on all markets with high level of daily volume such as Forex, crypto or commodities. I will also backtest the strategy 100 times so that you can see the real numbers behind it. Okay, so for this scalping strategy, you first need to open the tradingview.com and set the time frame to 1 minute. This strategy is also good for a 5-minute or even a 1-hour chart. The next step will be to click on the Indicators tab and search for the first indicator, which is called the exponential moving average. We need to add 2 of them to the chart. For the second indicator, we will search for a regular stochastic. And finally, let's install the sessions on the chart. Okay, now we're going to be changing the settings on these indicators. First, let's double click on one of these EMAs and change the length from 9 to 50. In the start section, let's also change the color. Now let's access the settings on the second EMA and change its length to 150. The next step will be to make some adjustments to the stochastic indicator. So in the input section, let's change all the parameters to 5. And finally, let's select the specific sessions we're going to be trading on. This setup works the best on the London and New York sessions, so let's actually disable the Tokyo session. And the reason we selected the New York and London sessions is because the market participants are more active during this time. Notice, as soon as the London session opens, the market starts heavily trending. And after a New York session, the market is usually flat. Okay, now let's understand how exactly we should trade with the strategy. So here are the rules for entering a short trade. First, we're only going to be looking to sell when the market is in a downtrend. For that, the 50 EMA must be below the 150 EMA. Second step will be to wait for the price action to pull back into the 150 EMA. The price action can either get really close to it, touch it, or even cross it. Third, the stochastic indicator must get overbought, and the orange line must cross above the blue line. The cross needs to happen either in the overbought area or really close to it. Fourth, during this pullback, the price action must not break above the previous key level of resistance. So a perfect setup looks something like this. The price action is making lower lows, and lower highs. Once we have these conditions met, we're going to be waiting for the price action to cross and close below the 50 EMA for our final confirmation. The stop loss will be set slightly above the recent swing high. The take profit target at 1.5 times the risk. Here's an example where you shouldn't take a short trade. So here we see the price action is in a downtrend, but if we take a look at this pullback, we see that the price actually broke above the most recent level of resistance. As we can see, the market started making higher highs. In this case, the short setup automatically becomes invalid, so make sure you do pay a close attention to the market structure, otherwise the strategy will simply not work. Here's another example for a short trade you would have taken. So first thing we're looking at is the position of the moving averages. We see the 50 EMA is below the 150 EMA. This officially confirms the downtrend. We also seen that the price action is making lower lows and lower highs. The price action pulled back into 150 EMA. The stochastic also got oversold and it gave us a bearish cross. Okay, now let's learn the long positions. First, we're only going to be looking to buy when the 50 EMA is above the 150 EMA. Second, the price action must pull back into the 150 EMA. During such pullback, the price action must not break below the key level of support. The next condition is to have the stochastic get into the oversold area, and then the blue line must cross above the orange line. The cross must happen either in the oversold area or really close to it. And for a final confirmation, the price action must cross and close above the 50 EMA. The stop loss will be placed slightly below the recent swing low, and the take profit target will stay the same. Here's one more example for a long trade. We see the 50 EMA is above the 150 EMA. The market started making higher highs and higher lows. We also had a pullback into the 150 EMA. The market structure hasn't been broken. We see the key level of support is right here. The price action did not break it, which is really good. We also see that stochastic got oversold, and we had a bullish cross. And again, you should not enter a long trade when the price action breaks below the key level of resistance when it pulls back into the 150 EMA. In this example, we see the market structure has been broken and the long setup automatically becomes invalid. Okay traders, now you know the rules for the strategy. Let's move on to the backtesting to find out its real win rate. So after 100 trades, the results are absolutely insane. The win rate is 82%. This is officially the highest win rate strategy on my channel. The profit and loss is also crazy high. The strategy made over 684% of profit on our account, but bear in mind this number will be different when trading live because of spreads and fees. The profit factor is 6.83 and we had 11 consecutive wins against 2 consecutive losses. So overall I give the strategy a score of 10 out of 10. It's highly reliable, safe and consistent. If we compare the strategy to some other ones I've already tested on my channel, we see that it's actually on a first place in terms of win rate. So yeah, definitely give the strategy a try, but make sure you test it with a paper money first before trading live. Okay, thanks for watching this video. I hope this strategy will make you a lot of money. By the way, if you want to learn more strategies like this, check out this playlist right here.